Which widely accepted financial truths are just old wives' tales? Well, in this series, I'm telling the truth about well-known money myths. Today, we're going to talk about the myth that higher market volatility automatically equals higher risk. But like most things involving money, the real answer is, it depends. Sometimes higher volatility does mean higher risk, no doubt about it. But sometimes it may not. So let's talk about volatility. Volatility is a measure of short-term movements in stock prices, ups and downs, right? These movements are driven by a lot of different factors. Global events, political events, corporate earnings, and oftentimes news headlines can drive volatility as well. Now, markets always move up and down, but higher volatility means that market swings between highs and lows, they're going at a faster pace. Now, this volatility, it can put your money at risk, especially if markets have been cruising along at high levels and all of a sudden drop. Think back to 2008 for that one. But if you don't panic and you stay the course, historically, we see that volatility eventually slows and markets generally resume their upward trajectory. So what's the real risk? Well, it's actually when you adopt what we call a set it and forget it mentality about your portfolio. Look, let's face it, markets change, your life changes, and even your goals change over the years. And we can't expect the investments that worked for you 5 or 10 or even 20 years ago to still work for you today given your current situation. In fact, we meet way too many people that come into our office and they've never reallocated their investments in their portfolio for their current lifestyle, and oftentimes they're taking way too much risk for what their life actually needs. Now, maybe this sounds like you. If it does, feel free to give us a call so we can help out. We'd be happy to meet with you and make sure you're prepared when that volatility comes back. After all, we know it will come back. It's just a matter of how prepared will you be when it does.